Well, hello, and thank you for joining me today. I am pleased to have for this interview a close friend, confidant, and excellent Chicago businessman by the name of Rod Berthold. Rod Berthold is the president of Gus Berthold Electric, which is a company for which he has had the opportunity to be its president for, what is it, more than a decade now, at least?
I started work at Gus Berthold Electric in 1997. I've been president since 2004.
Excellent. So, how and when did you become president then? In 1994, you began working. In 97, you became the president. Is that correct?
No, sorry, 1997 I started working here. Became
Gotcha.
president in 2004.
2004.
At that time, my dad was president of the company. He
Hmm.
was an engineer, very interested, a great engineer, genius engineer, not so much of a businessman.
Okay.
And so he was not really interested in running the company. He just wanted to do his technical engineering projects. My cousin, who was working here at the time, and I saw the sort of void in leadership of the company, and started talking to my dad about transitioning leadership to us eventually. And we started talking about doing it sooner than later. And to my dad's credit, he understood that he was interested in the engineering and not so much the management of the business. And so we worked together to kind of create an ownership transition in which my cousin became CEO of the company, managing the business. I was president in charge of engineering. We were effectively supposed to be equals. And that didn't work out so well in the long run. There's a whole long story that we could spend the entire hour and another hour on describing on how I wound up firing my cousin and taking over as president of the company. And interestingly, for me anyway, for a while, I was kind of like my dad. I was interested in the engineering and the technical aspects of things. And while I took care of some of the deficiencies I had seen in the business, such as banking arrangements, for instance, I remember at the time one of the things I looked at when I said, my dad wasn't interested in running the company. We had at the time over $1 million sitting in a non-interest bearing checking account. And this was back when you could make some good interest on something. I figured we were giving up $30,000 a year in interest just by not doing that. So I fixed up some of those little things, but when it came to running the company, I just sort of let it go on autopilot. And then what happened was in the early 2000s, when there was the telecom bubble burst, a lot of our businesses in the telecom industry, we had a sharp increase in sales prior to that. Then when the telecom bubble burst, our sales dropped tremendously and we started losing money, and we lost money for 3 years in a row. And my accountants kept coming to me and saying, Rod, you're losing a lot of money, and I didn't really know what to do about it. And after 3 years, I said, well, it's not just going to come back. We're not just going to suddenly be profitable again at random. I'm going to have to figure this out. And so I started doing all kinds of things to figure out what to do. I had a friend who mentored me and helped me to understand our income statement. I started reading books, business books like Good to Great and Open Book Management. And then I went through a certificate in business administration program through the University of Illinois, which was sort of like a mini MBA for people that are working, and started developing all these tools of learning how to run a business and then applying the things that I was learning in our business. And there were a lot of things that went well. There were a lot of things that didn't go well. And the things that didn't, I tried to correct and not do. And the things that did go well, I tried to build upon. So really, it was probably by 2008 or 10 that I felt like I really became effectively president of the company. I really did sort of learn and start to run it effectively, and we were able to turn it around and have done real well since then.
I guess we should step back for the purpose of our audience here and describe a little bit. You've mentioned about the technical aspects of GBE, but what exactly does your company do?
Sure. Well, first of all, Gus Berthold was my great-grandfather. I'm Rod Berthold, so I'm the fourth generation to run this company. We manufacture electrical power distribution equipment. So if you imagine like the circuit breaker panel in your house, it's big industrial-sized versions of that. Heavy-duty, high-power electrical equipment. Some of it's for commercial and industrial applications, and then a lot of it is for the telecommunications industry. There are large national companies that build equipment that is electrically equivalent to ours. companies like Square D, General Electric, Siemens, and Eaton are all national companies that are in the same type of business as us. Our niche, we are a small local builder. So we cannot compete with those national manufacturers on price. They have economies of scale that we'll never be able to achieve. So our niche is in high quality, custom configuration, and short lead time. So if you need, so we find little niches that are conducive to our style of manufacturing that tend to be a higher profit margin, and that's where we fit into the electrical equipment industry.
Hmm. So you mentioned in here that being small and local, and tell me a little bit more about why your great-grandfather decided to locate the factory where you're at. Describe a little bit the neighborhood and how come your factory is there and what it's looked like over time as being a Chicago-based manufacturer.
Yeah, okay, so I think from my understanding of the history of the company, back in the back in 1925 when my great grandfather started the business, they were located actually a little bit closer to the heart of downtown because that's where manufacturing businesses were back in that day. Over the course of the subsequent decades, I think we moved twice, both times a little bit farther out west. We've been in the building we're at since 1958. We are located 4 blocks due north of the United Center, where the Chicago Bulls play. And that's west of downtown Chicago by 3-4 miles west of downtown Chicago. We're in the city. We're in an industrial area. It is part of where we're at is located as part of the Kinsey Industrial Corridor, which is an area that the city of Chicago has zoned and designated as being for manufacturing. They limit the allowable uses. So in this area, residential use is not allowed. Commercial business use is not allowed. It's specifically zoned for manufacturing businesses. And the city does that in order to attract and retain manufacturing businesses like ours. The idea being that manufacturing jobs are very valuable jobs for a city. We pay good wages to our workers who then spend that money in the city. So while we're not generating the same kind of potentially tax revenue that they might get from a retail business where they're getting all kinds of sales tax, for instance, they're still getting actually probably more value because they're not only getting the tax on the stuff that we do sell that's in Illinois that has sales, but also just the economic growth and like I said, the employees that are spending their money here.
So you said you pay good wages, and Chicago, of course, has a long history of some strength in its unions. So I'm curious, do you use a lot of union labor, or is most of your labor non-specialized?
We are a union shop. We've got 2 unions. We have electrical union and sheet metal union. They're 2 different unions, but we have about, and I should say we've got 28 employees total, 8 in the office, 20 in the shop. So all the shop is union labor. That's not necessarily by choice, but that's how it works out in Chicago. Like you mentioned, it's a very strong union environment here. We tend to pay at or sometimes a little bit above union scale. These are real good quality jobs, and we as a custom manufacturer really rely upon our skilled union workforce. Our average tenure in the shop is about 14 years. So we hire guys, and it takes a lot of time to train them in sort of our specialty, and so we need them to stick around. Our type of business isn't conducive to a lot of turnover.
So it seems like in order to be able to accomplish your differentiators of customized and short lead time, you are highly dependent on a stable workforce that's highly skilled that chooses to be with you for a lengthy period of time in the Chicago marketplace.
Exactly, and we try to have a work environment that's conducive to that. So I'm trying to pay my workers a good wage. We pay a bonus every year, which is dependent both upon overall company financial performance and also individual employee performance. And generally try to have I think a lot of the advantage is for our employees is that we're a very stable employer. They know they've got a good job, that the hours are stable and solid. We're not a seasonal business where they're going to have their hours cut short, depending upon either seasonality or low business. We try to attract and retain those guys because we need their workforce. And one of the things that we try to do is times when, for instance, business is slow, rather than reduce hours or lay off, we will do things like maintenance on the shop and build stock things that we know we'll be using when we're busy, things like that. So you rely upon having a good, solid workforce that way.
So it sounds like after you ascended into leadership and you were able to understand accountant speak and study some MBA level courses, you were able to turn GB back into a profitable enterprise, which is a wonderful thing to be able to accomplish. But then once you are profitable, it brings up new difficult decisions for you. And so, for example, when you are profitable, it sounds like you do share some of that profit with your employees in the form of bonuses. One would imagine too that you reserve a little bit for a rainy day fund, just in case that there are some slow periods. But the context of this course also wonders about making investments in real estate. So you're in the Kinsey Industrial Corridor, and when you are profitable, how and when do you think about taking some profits and reinvesting it into this plant that you've occupied since 1958, did you say?
Yep.
In order to make it a more sustainable manufacturing facility for you?
Okay, so generally, when it comes to the profits of the business, my philosophy is usually I want to use the profits at the end of the year and put a third of it, a third of the profits I'll return to the employees in the form of bonuses. One goes to ownership, so that's to the investors, to the owners of the business, which is just me personally now. I own 100%, and then 1/3 to retained earnings. And that retained earnings is used for exactly what you're talking about, things like upgrading the plant and equipment. And generally, we're not, as a small privately held company, we have a lot of flexibility to decide what we want to do and what we don't want to do. Sometimes you hear about big companies where a manager, oh, I've got a budget that I have to spend, and if I don't spend it, it's going to get reduced next year. I don't have any of those issues. I can use it. I don't have to use it. So I'll choose to do upgrades in machinery or equipment, just depending upon what makes sense and when do we need it. And can we get more life out of what we've got by repairing it or continuing to use it? Or if we want to get something new, what do we think the payoff is going to be? What's the benefit going to be? So generally, we've got we're well financed, we've got money in the bank, and so I can look at saying, okay, I'm going to use some or none or all of those retained earnings on upgrades to our plant facility, on what makes sense.
So here you are in the Chicago marketplace in a specialized corridor, but in an urban environment that nationally is reasonably expensive, both from a labor standpoint, from a tax standpoint, from a square footage of real estate. Have you ever thought about picking up shop and going somewhere else where it might be cheaper to manufacture, perhaps a different market or even the suburbs, a different state even?
So I've thought about that, yes, off and on over the years. In fact, back in, okay, so this will go back to the history. In 1968, my grandfather bought land out in Des Plaines. So it's a suburb, maybe 15 miles away. And the reason he bought the land at that time was he thought we might need to move our property, our facility out of the city. And that's because in 1968, historically, there were riots in this neighborhood. Well, there was a Democratic National Convention, and people were rioting here. And we said, well, we might have to get the hell out of here. This is a dangerous. And even when I came to work here in 1997, it wasn't the greatest neighborhood. I would routinely see prostitutes walking up and down the street, which is illegal in the United States. And so it generally is a indicator of a seedier type of environment. And we would have petty crime around here, cars broken into. I've heard stories in the 80s of people being mugged right outside our building. However, over the years, that's improved. And the neighborhood now, I'm amazed. I look outside and I will see young mothers pushing their baby strollers by, and we shake our heads and say, 15 years ago, you never would have seen that. Getting back to your question, though, so taxes, I don't think are actually particularly high here because of the industrial corridor. If it wasn't an industrial corridor, yes, the taxes would crank up, and that's the exact reason they have the industrial corridor, is to encourage manufacturing businesses to stay here so that they don't get priced out and all flee, and the city would lose that tax base. I have considered moving if I moved out to one of, oh, and by the way, going back to the land in Des Plaines, we sold that land in the early 2000s. My cousin and I, when we were running the company, we decided, you know what, we're going to stay where we're at. We like being at the time, we had a lot more customers downtown in high-rise buildings. Northwestern University is a big customer of ours. We would make deliveries downtown all the time. Also, it's pretty centrally located to multiple different expressways, so easy to get different places. There's delivery trucks in this area all the time. It's centrally located for our employees because we have some that live south, some live west, some that live north. And this is just where we've always been. The building's all set up for us. Now, we could move out to Elmhurst or one of the other suburbs, which maybe would be economically advantageous. I've considered it even more as over the last few years, development is moving farther west out of the city. And I know some of the hot areas just a mile or two east of us, where like McDonald's and Google are moving in, are leading to a lot of speculation. I get calls and emails and letters probably at least every week saying, we're interested in buying your building. And so I probably could sell this building and make quite a bit of money and move somewhere else, out into the suburbs probably. I wouldn't want to move out of state or someplace else, necessarily, in part because we've got this highly trained workforce, and how are we going to replicate that? Most of those aren't going to come with us, and that would be a huge challenge to do. If we moved out to the suburbs, most of those guys would probably come with us. But really, as I'm the owner of the company, I don't want to do that. I'm not interested. I'm happy with what we've got. What we're doing is working well. It seems like there would be a lot of work to do to make that happen, and I don't know how much benefit we would get out of it, other than maybe I could make a little bit of money on the sale of the building, and pick up something cheaper somewhere farther out and put some money in the pocket. I don't need the money. We're not driven by adding shareholder value. We're not compelled to figure out what's the best way that we can wring the most profit out of the company as possible. If we were, then maybe it would make more sense to sell it. But the convenience of myself, my employees, and my business trumps any possible minor profit motive that I have in this case.
So it sounds like being Chicago-based is a multifactorial important thing to you. It's got family legacy in it. It has a workforce access element, and it sounds like you're very centrally located in an area too that has a tax benefit for you that keeps you in the Chicago marketplace.
Factor too. Sorry to interrupt, but as you mentioned, the different benefits. Another interesting point that isn't real obvious is that we have a very strong local builder market in Chicago. And when I say local builder, I mean a small company like ours that manufactures electrical equipment. There's 4 or 5 other companies similar to ours in the Chicago area. We're the last one left actually in the city, but we've got a couple of companies similar to ours. We don't really directly compete with each other. We all kind of have found our own little niches or marketplaces, but compared with other major metropolitan areas, the Chicago local builder market is very strong. Other places that don't have local builders like us, they just make do with whatever standard off-the-shelf national electrical equipment they can get. But there's a marketplace driver to Chicago also.
Right. So it sounds as if when you came aboard, you mentioned that you had access to some liquidity that was sitting in a non-interest-bearing checking account. You immediately realized that there were some investment opportunities there. And then with a successful business, you mentioned that you're able to take about a third of any profits and distribute them to ownership, which would be you. Now that gives you some opportunities as an individual investor to think about, well, how am I now going to participate as part of the markets community? So I'm curious, do you participate at all in any form of investment in the Chicagoland marketplace, or are you just a strictly buying stocks and bonds on your own personal level kind of guy?
Yeah, so now we're talking basically about my personal finances, which changed quite a bit once I became owner of the company. And so as I had access to more and more cash, I started looking at, what should we be doing? What should I be doing with that? How can I make the most use out of it? And certainly, stocks and bonds and things like that. Actually, generally, my wife handles most of that. She does a lot of our personal investing, and we tend to favor mutual funds and things that we know are, especially like an index fund that is has low management fees, and historically, most index funds, actively managed index funds, they don't beat the market, so you might as well invest in a regular index fund. But then I started looking at, well, there's got to be other opportunities. And I was interested in real estate investing, but I don't know how to do that. I don't have personally enough of an understanding of the real estate market to be able to analyze an investment and to be able to figure out how I would get into it. I don't know what I'm doing.
Mm-hmm.
And I know there are some companies out there that will do that sort of thing for you. In fact, my wife invests in something called realty shares. I've heard her talk about that. I think, oh yeah, we're going to invest in this hotel that they're putting up in Miami, and I get a little tiny piece of that. That wasn't something that particularly interested me, but I have a friend who I know has his own business that invests in commercial real estate in the Chicago area. As I had access to more funds, I started talking to him one time about, what is it that you do, and learned a little bit more about him and what he does. And it turns out he invests in commercial properties in the Chicago area and buys them, manages them. Some of them he is keeping for the income. Other things he buys with the intent to sell it, either just a straight flip and get more money, or invest in it and build it up and then sell it later for more, depending upon the sake of the property. This is a guy that I've known through Indian princesses that I would do with my daughters for years and years. And I know him personally. I know enough about him and his character to trust the guy because I'm terrified of, if I was to go to somebody that I didn't know, that would I know if this is a legitimate business? Would I know if this is a Bernie Madoff type of guy that is just conning me? This guy that I invest with the real estate, I feel like I know enough about him personally and his character, and also his, he's got kids that go to the same school as my kids. He's active in the community. Like, he's probably not ripping me off. So most of my real estate investment is through him. So I don't really analyze any of these investments. My friend will tell me, hey, Rod, we're looking at getting into this one. Do you want to put some money into it? How much do you have available? Here's how much we're looking for, and I'll invest that way.
Now, you mentioned that this friend of yours in the community invests in Chicago-based real estate, where your wife is dealing with realty shares. That sounds like it's more of a national enterprise. Is it important to you at all to be an investor in the Chicago marketplace as someone who is a business owner and resident here, or are you just looking for returns?
Honestly, I'm just looking for returns. I don't feel like I have a civic responsibility or any kind of particular, I haven't gone out and analyzed, hey, this is the Chicago market and I feel it's way better than the Atlanta market or the Miami market. Although I will say I do have some investments in Atlanta area real estate and some Florida real estate too. But these are, again, ones that I got through my friend that I mentioned, who he has another friend or associate that he does business with that does a lot of other real estate investments in, I believe, Atlanta, because they've determined that that's a growing marketplace with a lot of opportunity. Florida, because that's where they're based. So I've gotten involved in some of those investments too.
So it sounds like trust is a big component of how you develop a relationship with somebody who can represent your investment interests. Sounds like too, being a member of the community is also important, as well as knowing this person has skin in the game as it relates to your personal relationship. How has your performance been thus far? Is it something that you find to be a profitable relationship? Are you seeking other new relationships to replace it? Or how has your experience been with this trustworthy foe?
So the experience has been very good. I think I keep a spreadsheet of all my investments with him, and how much money did I put into it, and then how much money came out of it. Overall, all of the investments I've done with him that have closed have been profitable to one degree or another, generally more profitable than what I could have made if I was just investing in regular investments that are accessible to anybody. So if I had put that money in a mutual fund, well, I did that with the real estate stuff. Now, I also know that the real estate stuff that I'm doing has both higher opportunity for profit and higher risk. So one of the things I like about real estate investing, as opposed to investing in a company, a startup company or something like that, is that I feel like the downside risk is limited by the fact that I am owning a portion of actual property, which isn't ever going to go to zero. If I invest in some startup company, I could lose all my money. With real estate investment, I feel like the worst thing that's going to happen is there's going to be a downturn in the real estate market, and I'm either going to lose some of my money, or my money's going to get tied up in real estate for a longer period of time before the market kind of comes back and I'm able to make more money again. So overall, though, going back to your question, the profits of what I've gotten through my friend and the real estate investment I've done have all been favorable to one degree or another. Some very much so, some mildly so, all of them good. There are a bunch of investments that I'm still in, and so I still have money invested in them, so I don't know what the return is going to be until really they close out.
So it sounds like then there is a component to real estate investing that provides you with the degree of security knowing you're purchasing a real asset as opposed to just a financial instrument in something like a startup where you're purchasing a piece of ownership on paper where you mentioned that your value could go to zero, but there is some comfort in knowing you're purchasing land and or the improvements on it, so you'll always have some liquidity value to it. That seems to be...
And the improvements on it are insured. So if the building that's on there burns down, well, we'll collect on the insurance for it. So yeah, you're right. There's a lot of security, I feel like, in real estate versus other means of investment. Now, if I was investing in a mutual fund, yes, conceivably all the companies in there could lose all their value when it could go to zero, but that seems unlikely to happen. If the entire economy tanks to the point where the value is zero, that's probably going to be the least of my problem because I'm out in the street fighting the zombies or whatever is happening. So yeah, the real estate provides a degree of security, I feel.
Yeah. So it sounds like then as an investor, you take more of at least a medium-term view. You're not a reactionary, panic-oriented person who's thinking about how to change his portfolio right now in the midst of a crisis. You're looking more, 5 to 10 years out in general and taking more of a patient approach?
Yeah, exactly. I don't, my motivation is I would like to be making use of the excess cash that I have available in whatever form that takes. My motivation isn't I need cash now or I need a steady cash flow to live off of. It's more wanting to be efficient and make use of the assets that I have. And so I can take a medium to long-term view easily, and I try not to be reactionary in our traditional investments, especially in one of the things my wife and I were pretty well on the same page in terms of investment strategy. She'll talk about the times when the market is down, like now with the pandemic that's going on, and that's sort of hurt businesses overall. That's a great time for us to buy. That's when the market is down. That's what you want to do. You want to be buying into things. As far as the real estate side of things go, I know that I don't know what I'm doing. And so I trust my friend to know what he's doing and him to analyze it. And I know enough about, I don't even second guess anything that he does. I don't ask him for, hey, why are you doing this? Or what are you planning on doing that? What I know is the guy's track record, his character, I know that he's far more qualified than I am to analyze the overall market or any individual investment and make a good decision on its performance. So I'm really relying upon him to do that for me.
Well, it sounds like you at least have enough knowledge to recognize that the advisory function can provide you with the knowledge gaps that you feel that you have. And so you have the benefit of a strong relationship with an investment advisor who can guide you into investment opportunities that match your risk profile and have provided you with the performance that you need. So that's an excellent way to recognize one's own deficiencies and to leverage the expertise of others. It seems as if that's a thread in your career in terms of being a Chicago business owner and as a Chicago real estate investor. You're also now a member of a global learning community related to investments and focused on the benefits of Chicago. So I would like to take this opportunity to thank you, Mr. Rod Berthold, President of Gus Berthold Electric, for taking your time to share your knowledge on these topics with us and our class. And I thank you for all of your input.
Happy to spend some time with you, and I hope it was worthwhile.